So I said, explain it like a 5-year-old. Let's go back. Let's look at the charts historically, and let's just see what we can deduce from this data. And we're going to go with the S&P specifically, right? So the S&P has had 27 bull markets and 28 bear markets since 1928. And you could see right here, hopping into Bitcoin, look at how interesting this is. So each one of these right here represents, so we understand that they're making money more difficult to borrow by raising the rates, right? But what else are they doing? Well, the debt is still going up, right? We can both agree this number's going up. I mean, we can see it going up live, but look at this number. Now this number is going down. This is the US federal tax revenue.
Hey, welcome back everybody to Altcoin Daily. My name's Austin, joined by analyst in the cryptocurrency space. He's been streaming since the depths of 2018, 2019. Crypto Zombie, thanks for joining me.
Thank you so much for having me on the channel. It's been a very long time. I think the last time I was on your channel was literally over 3 years ago, where we were doing our top altcoin picks. So that was pretty fun, but really great to be back on. I love your channel. Love you guys. You're one of the best, especially in the bear market. I love the fundamentals. I love the news. So yeah, keep doing what you're doing. And thanks for having me on.
How'd those top altcoin picks turn out? I forget. This was a live interview. It was like a man on the street interview.
So actually, you told me to pick 3. I couldn't. I picked 4. I copped out. And I remember I went with Ethereum. Obviously, that was the cop out right there. We all know Ethereum did well. I picked exchange tokens like BNB, and they did very well in the run. And then my 2 altcoin picks were Chainlink and Quant. And I think today you could see Quant is actually one of the best performers in this bear market. And, you know, we were picking these based on fundamentals, and yeah, so they did pretty well. So hopefully I can make another video that, you know, hopefully will stand the test of time, or I don't know, something like that. But
definitely. And your channel, much like mine, well, you do more TA, that's for sure, but you're going over the big picture daily news, which is why I think a lot of people, like, you love your channel, subscribe. Links for your stuff are down below. But before we jump into the Bitcoin price looking forward, what's your background, Zombie? How did you get into analyzing crypto?
Sure. So without wasting everyone's time, I know you want to hear the charts and all that, but basically I feel like I am very easily understood by the everyday average crypto guy. I mean, I used to work with my father's landscaping business. He's a very successful local landscaper, one of the biggest in the areas, for 40 years. And, you know, kind of thought that was going to be the future, but always felt like maybe this wasn't really for me. Spent some time on the internet trying to make money. I got into everything you can imagine, every possible make money, whatever there was. Started focusing a little bit more on affiliate marketing. And my mentor at the time had actually been dealing with people across seas, and he was using Bitcoin to pay them. And I had heard about it in college, completely ignored it. Probably could have bought it at like 5 or 8 cents or something like that. Too busy partying, right? And, you know, I was like, oh, this is still a thing. This is crazy. He's like, oh yeah, you can use this. So I was like, this is cool. Got a Coinbase. I bought like $100 of it in May of 2017, right? Forgot about it. Came back a month later, checked my thing. The $100 is now $200. So that was when I was just like, okay, what's going on here, right? So I think, like most of us, it starts kind of chasing that money. You know, you get greedy, whatever. And then really what happened was, once I started learning about Bitcoin, learning about the blockchain, the censorship resistance, having your own ownership. I mean, you just go down a rabbit hole, and then it wasn't as much about the money. That was like a cool extra side thing. Yeah, we're making money. But I just got completely obsessed with it. And I had been watching crypto videos, listening to podcasts, and I just felt like there wasn't really one for the average person. Most people were talking in very technical language that I didn't really think was, you know, easy to understand. So basically I started my channel in the bear market, by the way. So anyone says that I started in a bear market, trust me, I started at the worst, right? And yeah, just tried to make a channel that the average person could kind of just get on board with and learn crypto. And we've sort of just been learning and sharing together. You know, as I do research, I share it with the community, and we've kind of just grown together over the past 6 years.
And speaking of that, the daily breakdowns where average people can understand, let's jump in, because I know you brought some charts looking big picture macro bull and bear cycles in the past.
Right. So rather than focus on the short-term time, right now is a little bit boring, although I am expecting volatility within the next week. You can check out my channel for those reasons. But I wanted to try to understand, because everybody is saying the same thing. Right? This time is different. No, you don't understand. We've never had the Fed the way they are. We've never had the world the way it is. We've never had the central banks doing what they're doing and inflation. So, everyone likes to pretend like this time is totally different. It's our time. We want to feel special. But I said, hey, let's look at the charts. We've had recessions. We've had the Great Depression of the 30s. We've had war in the 50s. We've had Volcker in the 80s, right? Rates up to inflation 15%. So I said, explain it like a 5-year-old. Let's go back. Let's look at the charts historically, and let's just see what we can deduce from this data. And it's pretty interesting how, regardless of how bad or good or whatever these times are, you start to notice these patterns that emerge over time. And I thought it would be really cool to share that with your audience today. There might be some people that are thinking doom and gloom, 10 years sideways, I'm never going to get my money back. There may be a little bit of a silver lining, around this dark cloud. And I just wanted to share that today.
Let's check it out.
So basically, if you guys see here, this is the history of US and bull and bear markets. This is from First Trust. So this is all the data dating back to, and you can see right here to 1926. And these blue represents the bulls, and we have these bears. Now, obviously, some are a little bit longer than others. But what we can see right here ultimately, and by the way, we have to pay attention to the definition too. A bull market is anywhere from the low, right? The lowest point, 20% up. Bear market is considered when you're 20% down from the high. So that's what we're going to kind of go with here based on the average bull bear definition. So you can see right here, and we're going to go with the S&P specifically, right? So the S&P has had 27 bull markets and 28 bear markets since 1928. And you could see right here that the average bull market period is around 6.6 years with about 340%, while the average bear market is about 1.3 years with an average cumulative loss of 38%. And this is not cherry picking. This is basing it on, back here in the 30s and the 40s. This is just the whole history, right? And what we can see is that if we look at this difference of the last 92 years, there was about 20.6 that have been bears. So ultimately over the history of the, stocks in the US specifically, and I'm looking at the stock market because Bitcoin only has 13 years history. And this is the much broader view, assuming that we are as correlated as people say we are. This basically means that stocks have been on the rise about 78% of the time, which is pretty incredible, which means that really these bear markets, although they do seem like they last forever, they really are short-lived. Some of the longest ones that we've had back here, this was 2.8 years of a bear market. 2.8 years is nothing when you think about it in the long scheme of things. And this was in the 30s during a recession and the Great Depression, right? You can see every time we have these green lines, these gray lines, these coincide with recessions. Now, we've had recessions in bulls that have never affected it. I think what most people are concerned about is we're in a bear and we could have a potential recession, right? So let's just actually look at some of these numbers. So you have the normal. Let's just take the normal, which is 1.3 years of a bear market, which assuming we have 30-month days, right? That's 475 days. So this green line that I drew here on the S&P actually is literally when we finally hit that 20% drawdown right here on around, it was May 22nd, we hit 20%. So let's start from that level. Now, if we just go based on the standard 1.3 years, right? So that's around, and by the way, you do have to subtract weekends because this chart does not factor them in. So 475 minus 126, because you have 8 every month. That would be 349 days out, right? So if we drag that out from this area, that actually puts the potential bottom, the potential reversal at around May of 2023, right? So keep in mind, though, that the definition of then ending a market is coming up 20%. So that actually assumes that the bottom would technically be in before that day. But I know what you guys are saying. Recession, right? So let's go with this right here. So you can see right here, obviously, when we have recessions, it's about 18 months. It tends to be a little bit longer. The recessions tend to drag us down a little bit longer, which is what everyone thinks we're going in right now, even though I know they're changing the definition every other day. But we'll do that. So, excluding weekends, 540 days, a little bit longer, right? Recession minus 144, which would be, 8 weekends a month because we're using only Monday through Friday on this chart. That's about 396 days out. So if we come out here, 396 days, stretching this out, that says that we should have a bottom right around June 23rd of 2023, or at least the bottom should be in, and we should already be up to a 20% recovery. Now, here's the crazy part about this. Everyone is saying that, this is going to just ruin the cycle for Bitcoin. This is going to destroy everything. And, we'll never have the same cycle again. Now, hopping into Bitcoin, look at how interesting this is. So each one of these right here represents the halving, right? And you could see it looks very similar. Some things you can note, the halving always takes place lower than the previous high. And we usually don't get to the new all-time high until about, a few months to a year after the halving, give or take. So this yellow line right here represents that June 23rd projection, whereas the stocks should be having that 20% bounce off the bottom, which tells us that somewhere between now and June 23rd, we should be having that bottom. So I don't know where that's going to be. We've made cases for why this is the bottom. I've gone over charts on my channel. Technical analysis, all the indicators that we use say that the bottom is in. And I can go over that in another video if you guys want. But for this, practical purposes, let's assume the bottom isn't in. Let's say that I'm wrong. Let's say that all these indicators are wrong and we do have some kind of a dump down here, right? Well, this is telling us that this should be the recovery, which means that by that point, it's very possible that Bitcoin could have a flash crash, but at that point, we should be heading back to recovery. Now, on top of that, the interesting thing is that, like I said, if we do look at the past right here, you could see that every time we do have these halvings, you could see right there, you could see right here, and, you could see up here. Every single time we have the halving, what are we doing? What are we doing? We're doing a boring sideways consolidation, boring sideways consolidation, boring sideways consolidation. We're below the all-time high. We're below the all-time high. We're below the all-time high, right? This is actually showing me that thus far, based on these projections, absolutely nothing has changed in the Bitcoin narrative. We're exactly where we're supposed to be at the time that we're supposed to be at during the 4-year cycle. So it's very interesting how everyone is saying doom and gloom. This time it's different and all this, but yet if you actually look at the charts, we're actually exactly where we're supposed to be. And, if you take this from the time that we have, this halving event and we come up to here, that's about 365 days roughly. We take it from here to the top. That's about 400 days right there. So between 3 and 4 and, what was this one right here? This one was about 365. So let's just kind of take any average and say about 380 days. I mean, that's kind of like the rough average, like I said, you can't get official numbers anyway, so projecting that out to here, that's showing us that, we could be looking at a potential new Bitcoin all-time high somewhere between March 25th and March of 2025 and May of 2025, which would put Bitcoin perfectly back on the cycle, which means we didn't break the cycle. And even with this recession bear market factored in on the average, nothing has changed. So this is why I beg the question, is it really different? You see what I'm saying? So
Zombie, I loved this data that you brought. Man, I tell a lot of guests, hey, we want to have you back in a couple months. Dude, I want to have you back. You're bringing this sort of data. That was great.
So that's part one, right? But I hear it because I love the comments, and I already know everybody's a macroeconomist now. We're all macroeconomists, right? We're all learning. Everyone just learned about CPI and PPI and yield curve, and now we can just go write a book on it, right? So I get it. That's Bitcoin. I'm biased. I'm a Bitcoin guy. I like Bitcoin, but the Fed, right? The Fed. Okay, let's talk about that. Let's talk about the fact that the world economic system is basically built on for-profit companies, right? So let me actually just go back to sharing my screen. I just wanted to bring the video out, get a little FaceTime here. Definitely. So going back to this again, if we share this, let's come over here. Let's have a look. So talking about distribution of countries with the largest stock markets worldwide as of January of this year. Wow. 60%. The US, right? 60%. Now, you might be saying to yourself, well, Powell said he doesn't care. He's going to crash the markets. What does it matter? He doesn't care about you guys. They probably shorted the top anyway. All their buddies, what does it matter? They want the recession, right? They want the great reset. Okay, that's possible. That is possible. But let's have a look at something that's, anyone can go to this website. It's literally the usdebtclock.org, right? And I just want to show you something very interesting right now. So we understand that they're making money more difficult to borrow by raising the rates, right? But what else are they doing? Well, the debt is still going up, right? We can both agree this number is going up. I mean, we can see it going up live. But look at this number. Now, this number is going down. This is the US federal tax revenue. So they are making less revenue. Now, you don't have to be a rocket scientist. How do these guys make their money? How do governments make their money? They make their money through taxation. And right here, you can clearly see that we are losing revenue live in front of us. So what does this mean? Well, I mean, obviously, they're going to, what they're saying they're going to do is they're saying they're not seeing the unemployment yet, right? So they're not getting those official recession, warning signals that would allow them to start pulling back. But at the same time, stocks are crashing. right? So if stocks are crashing, unless you're like a super savvy investor, which let's be honest, 90% of day traders lose, most investors just hold for the long term. That means that this year we are going to have losses. We're going to have losses this year. You don't owe tax on losses. There's no capital gains on losses. So all of that is right out the window, right? Now, if they do, continue to push, we have prices going higher and maybe we have spending, pulling back a little bit. We start to see some unemployment, which we're not really seeing that data yet, which is why I said they're not looking to full pivot just yet, but it's going to happen eventually. It happens in, unemployment rate in the Volcker era was like 6%. It's inevitable. It just comes after these types of moves. Okay. So now we have unemployment. Now we're not getting revenue from them either. So we have nothing coming out of the stocks. We have nothing. We can't tax the guy who's working because he's not working. And then on top of that, he's actually claiming unemployment benefits, which means we have to now pay that out, right? So these are all factors, and I'm oversimplifying it. Like, I'm not a macro guru. There are guys that can hit you with 100 more points. I'm just trying to break it down for the average person why this does not make sense long term. You have the UN coming out, basically begging the US, please stop doing what you're doing. Yeah, the dollar is the strongest guy on the playground, but if nobody wants to play with the dollar, then what does it matter? If you're the strongest guy, but you're not in our game of tug of war, then you could be the strongest guy sitting over there. Nobody wants to use you. The BRICS don't want to use you. They want to create their own new currency. And, look at gold. Gold is manipulated. So that's why for me, Bitcoin is the answer, because no one controls Bitcoin. I mean, and I don't want to get on the topic of proof of stake, but what Ethereum is basically doing right now is sort of just doing what we already have in the system, right? The rich already have the power. The guys with the money have the power. Bitcoin is the decentralization. If you want to 51% attack the network, you have to get miners. You have to use electricity, and they don't like this. And that's where the decentralization comes from. It would actually be inefficient to attack the network, which is why I think that eventually these guys are going to be adopting Bitcoin in our lifetime as some form of a standard, regardless. And that's why I remain on the Bitcoin side. And, before I let you, I know you probably got a lot of questions, but this is why I say, how is it different this time? Great Recession, right? The 30s. I mean, the Dust Bowl, whatever. Imagine those times. People just thought, this is it. We had a good run, fellas. Well, just kidding. Bear market only lasts 3 years. Boom, we go up for another 10, whatever it is. World War II, the end of the world, right? People are talking about nuclear war, all these things. Well, we had World War II. Came out of that no problem. Paul Volcker, one of the craziest eras, 15% inflation. He came, I think it was like a 21%. You think it's bad what we're doing now? He did 21%. And actually, if you look at the stocks during that period, they recovered in like a month. He just ripped the band right away, And so I just think this time that, it's not that different. And we like playing into the narrative. But if you look at the charts, you look at the Bitcoin halving, you look at the percentages that Bitcoin comes down, having that 75 to 85% drawdown, it's exactly where it's supposed to be. And yet the world is running around in panic right now. I just don't get it, Austin. I just don't get it, man.
Well, Zombie, just to re-summarize, like your point with the UN and the debt, you're saying that UN right now is begging the US to stop raising rates. They're bankrupting, the rest of the world's fiat currency. And you're saying the Fed right now, or the US government, isn't making money. So that's two reasons that they're going to pivot sooner rather than later, is your thesis.
I don't think they'll pivot immediately. I do think they have a point to prove, but I do think that you will start to see the rate hikes come down. And then at some point, what they might do is keep it level, just keep it level. And, if I went back to the chart again, I don't have the one pulled up for rates, but you can Google it. Once the rates hit, even if they raise it, whatever basis points, once they stop, and they cruise for like a couple months, you will start to see that appetite for risk assets come back in again. It's just because of the uncertainty of what's going on right now. There's only one thing that markets hate the most. They don't mind bad news. They don't mind good news. They hate uncertainty. At least if I know something bad is coming, I could price it in. If I know something good is coming, I could price it in. If I don't know what's coming, that's when I'm scared. And that's when I need to cover myself. You know what I mean? So inevitably, I would say, yeah, actually, this is kind of funny, but I would assume that we would start to see maybe the unemployment numbers getting a little bit higher mid to end of next year, and then 2024, right in line with that Bitcoin halving, start to get that reversal, and boom, there we go, we're off to the races again. So I'm not panicking. I mean, I'm taking these opportunities for accumulation, and I'm sorry for everybody that bought the top, but hey, guys, you and I, we've been through 3 of these, right? I mean, we've been through this. Trust me, I went through the 3 years of everybody telling me, well, that, are you okay, man? Like, I feel bad for you. People just say like, you totally screwed up, and your friends are looking at you like you're crazy. And then it's just 50K. They're all calling you back up. Hey, should I buy? It's
weren't you selling your car at one of the bear markets to buy more Bitcoin?
I did not tell that part of my story. Yeah. I sold my car. My house went into foreclosure. I rode a bicycle for 2 years. This is
At what
while I was,
price? At what year?
that was, well, I started my channel like pretty much at the peak and we started falling. So that had to be right in that it was around the 2018 and then that crazy 50% crash when we went down to 3,000. And that was when I was just like, I'm going all in. Don't do what I did. You know, if you have a family and kids, do not do this. I didn't have a family. I didn't have kids and I didn't care about my house. Yeah, I was making like $900 a week or something back then as well. And I was just every penny. I was eating ramen. Like it was sick, man. Like, but that's how much I believed in Bitcoin and I still believe in Bitcoin, you know? But it can be hard going through this because I do remember there was that moment where, you know, you start to second guess yourself. Did I make a mistake? You know, but rather than accept the mistake, I said, screw it. I'm too deep in it anyway. I'm just going to keep going deeper. So I don't know if that's the answer for everyone watching. I'm not financial advice. Don't do what I did. But, you know, dollar cost averaging is your best friend. And we always come out of these things. You saw the bear market. You saw the bull market. You see how long these last. You see that we're 78% of the time over US history from 1926, all the things we've gone through. And it still goes up. It has to go up. They have to inevitably revert back to printing. It's what the system is based on. It's based on debt. So anyone telling you anything else is a lie. And that's basic economics. That's not even me knowing that much, you know?
Zombie, I want to save the rest of this conversation about Bitcoin bottom specifically on another shorter video companion piece. It'll be released the exact same day. But just again, for my audience, I encourage you to check out Zombie's channel, his Twitter, his YouTube are linked down below. You're dropping great perspective daily, and I think you brought it here today.
Thanks, man. I appreciate it. You guys though, you got two guys working. I'm just one guy over here, so I'm trying. But I love your channel too, and I think we complement each other. You guys tend to dive a little bit deeper, I think, into like more of the altcoins and stuff like that. I try to keep it more TA macro, but I think we complement each other, man. Pleasure being on the show today.
100%. And you just one more summary. You gave a range of when you think Bitcoin will do the reversal and then bottom, presumably before that. Assuming maybe we've bottomed already, but assuming we haven't, if we do, maybe a flash crash, just on the top of your head, real quick, what could you see price wise?
Flash crash numbers.
If you believe you saying, hey, we probably bottomed already, but if we take that one more leg down, what's the price?
We had a similar thing 2 bear markets ago, not the previous one, but the one before. We had put in a bottom. We went sideways for a month. The bottom was technically in. And then on one day, we had a 30% flash crash that technically made that the new bottom. But realistically, the bottom was already in. It was just one more thing to just fake people out. So if we had something like that, all the indicators are telling us the bottom is in. The next level, though, is around 16,000. That's where we had the next most important weekly close on the candle. But the most important level for me personally is the monthly close of 2017. So a lot of people in their minds, they have this $20,000 Bitcoin top. But what they don't realize is we only spent maybe a day there, 2 days. I mean, it was very brief. We were actually at 20K. We didn't even actually go to 20K. The most important, if you look at the chart, monthly level across, we had a close at around 13,000, depending on the chart, 600, 800. That for me would be the ultimate flash crash bottom. I would be shocked if Bitcoin went lower than 13,600. And I would be shocked if we stayed there for longer than a week. I mean, if you're like seriously just waiting on the sidelines, just all in cash for that moment, I hope you can time it and I hope it comes, because the same way that everyone called for 100K, it never came. And the same way that everyone's calling for 10K, it may not come. Usually the herd is wrong. You know, if everybody was correct, then we'd all always be making money and no one would be working. We'd all be professional traders and investors, and then there would be like no jobs anywhere. No one would be doing anything. Right. So I tend to not follow the herd. That's how I've gotten very burned in the past. So based on my opinion, my statistics, what I'm seeing, the bottom is in. And if it's not in, then maybe a quick flash crash to somewhere between 16 and 38, but I don't think it'll 3.8, but I don't think it'll last more than a week, 2 weeks. And then I think we'll be right back up to the 17, 18s and everyone will be like, damn, I missed it again. You know,
let's continue this conversation in our second video, just delving into Bitcoin bottoms. But thanks, man.
Absolutely. Thank you.